Hi, I'm Scott Starratt with Starratt Wealth Management, a part of CG Wealth. So today mostly is a continuation of what we've seen for the last few months, which is higher and higher stock market being driven primarily from a very small number of companies. So interestingly, if we look back in history, the top 10 stocks that make up the S&P 500, so these very large mega cap companies, now represent over 33.7% of the index. Now, how does that compare to history? Well, if we'd have to go back to the nifty 50s, which were basically in 1975 when it was this high. Actually, it's even higher today. A lot of people talk about the tech bubble of 2000. The top 10 companies in 2000 still represented less of the S&P 500 than the top 10 companies today. So what does this mean? Well, it means that there's a very small number of companies that are driving the market forward. If we look at it from an earnings point of view, what we've seen from the Q1 of 2024 is that the top 7 stocks, so these magnificent 7 that I've referred to in the past, generated earnings growth of about 40%. If we compare that to the remaining 490 companies in the S&P 500, actually 493 companies in the S&P 500, then we would see that those companies, dropped by 0.2% in earnings growth. So not only are earnings getting higher and higher in these very small number of companies, but they're driving the stock market forward. What's going to change? Well, Tony Dwyer, our chief strategist, had a call on this morning that basically said he sees the broadening out of the market as being a primary driver going forward, meaning these 490 or 493 companies that make up the vast majority of the stocks in the S&P 500 need to grow as well. Now that happens one of two ways. Either the top 7 drop and these 493 outperform, or everything continues to grow higher and the 493 companies outperform the Magnificent 7. Who knows what's going to happen? All we know is that we've had a good few months. Although we are still positioned for growth in portfolios, we are cognizant of the fact that some of our managers have achieved 60% returns in the last year. That most likely is not achievable in the future. So are we to the point where we're taking money off the table? Yes and no. We did sell our position in Canadian banks here over the month of March at a very nice return. That money's still, for the most part, sitting in cash. We will most likely trim or continue to trim some of these companies or some of these investments that have done really, really well. But we're hesitant to make a big aggressive move to being defensive at this point because, quite honestly, we don't know how things are going to continue to grow. The economy in the US appears to be very stable. The talk of interest rate decreases continues to be out there, albeit at a much lower rate than what we had thought at the beginning of the year, where some market experts had called for 6 cuts. Now we're down to 3 cuts as consensus, as I said last month. And even throughout the month of March, we've actually seen that even decrease, so that there's some people that are calling for only 1 cut throughout the rest of 2024. Now, that doesn't mean that there isn't going to be cuts. It's just that they aren't going to happen as fast as what people had hoped for. Going forward, we continue to focus on making sure that we're providing excellent returns in a very diversified portfolio that takes into consideration the fact that most of you do not want volatility. So we're erring on the side of caution, yet still having a more aggressive bent in the portfolio, just keeping a lot of money available just in case things do take a little bit of a dip. We are running into the end of tax season, so as you know, you've received your checklist and or packages already, so please do reach out to any one of us if you do have any questions about the tax slips, or more importantly, if your accountant has any questions about the tax slips, have them directly engage with us and we can answer all their questions directly. Rimshaw and Angela are very, very fast in getting back any tax slips, usually within an hour or less. So, it's the type of thing that if your accountant's working on a file and they let us know, chances are we can get them back to you very fast. As always, more than happy to sit down with any of your friends, colleagues, or family members to discuss their portfolio. Like I said last month, we've had a lot of coffee chats with people, and quite honestly, it's been a mixed bag. Some portfolios from our competitors have done really well. Other ones, it's you can see why they're reaching out and trying to get a second opinion. But more than happy for the second opinion. More than happy to sit down and discuss more in depth your portfolio with you. I mean, we do have our reviews on a regular basis, but if there is something that does come up in between time, please do not hesitate to reach out and talk to one of us. More than happy to go through and answer any of the questions that you may have.